Wednesday, the 2nd of December. And my panelists, Chima Okadike from Vertiva Capital Management, Alikan Sajo from Rich Frontiers Management, CEO and founder, and of course, Akademi Sulaiman from Greenwich Merchant Bank. Three of you, ladies and gentlemen, thank you very much and good morning to the show. Let's give you a quick round of the marketplace for the equity side on Tuesday, effectively the first trading day of December, by the way. Nigerian stock market up 0.3%. The banking sector contributed about 2.5% to that big jump. Insurance went down on Monday, but overall, the markets kept hold and held on to the 35,000 level, which was the final finishing line on November the 30th. That was on Monday. Ivory Coast up by 0.6%. Now, well within the 130 above the Egyptian top 30 index, which is the main index, 0.89%. Kenya softens 0.5%, and the South African GSC 0.73% on the day, positive reading across a number of equities markets around the world. Let's take on the East African markets and try to find out what the Capital Market Authority is up to with the collective investment schemes, the regulations to strengthen industry. Kenya inflation 5.46% in November. It looks like things are getting a little bit tough there. I'm going to ask Ali how much he gets for a shilling. If a cup of coffee or whatever, tea, it now gets a lot more expensive. Airtel Kenya says he's in a 3-year deal with Nokia to start digging around foundations for 5G in Nairobi. Congratulations, Ali. And coffee maker Eaagads says his post tax profit 121% was good in September. It looks like Ali and the rest have been Steve been drinking more coffee these days. Rwanda's BK Group net income 10.5% positive in the 9 months. That's in Rwanda. Ali, what's happening to inflation? Cup of coffee, and it looks like inflation. Is it food inflation driven?
So primarily, the move is exactly as you've described. A big surge in certain food components within the food basket. But also the bigger story, which is now going to feed into inflation, is the currency, where essentially various reports have come out, the latest being Standard Bank, talking of a bifurcated FX rate. Official rate is showing around 110.20, down about 9% year to date. But the actual interbank market is trading somewhere between 113 and 114.50. And there's plenty of conversation and concern around the direction of travel. Kenya, as you know, has been knocking at the door of the IMF and the World Bank for further budgetary support. And both institutions have been talking of a weaker shilling. So I think we've got a trend now on the inflation rate, which tells me it's going to be headed higher. The corridor cap for the inflation rate for the central bank is 7.5%, so that you have an idea of where the cap might lie. But it is the shilling that is really now front and center of the conversation, and that's what people are keeping a very close eye on. Your other headlines, if I can quickly touch on them, coffee maker Eaagads is the only pure play coffee estate at the Nairobi Securities Exchange. It's had a tough time for many years, and this is one of the first times I can recall when they're actually posting a profit. And a number of things are happening here. Firstly, I think coffee prices have begun to firm up during this reporting period, so we got better underlying coffee prices, but also they've gone for value addition. They did a tie-up with Dormans. Dormans is a big coffee player here, and basically adding a lot of value to the Eaagads production. And I think that's what you're seeing now in terms of performance. CMA reviewing collective investment schemes. CMA has been undertaking a bunch of reforms, and this is a part of that as well. And then touch on your final story, Airtel Kenya signing a 3-year deal with Nokia to lay 5G foundations in Nairobi. You know that Huawei really is the dominant player. I think they have about a 65% market share in sub-Saharan Africa. So this is an interesting geopolitical and economic development because Airtel is across the continent, and obviously they're seeking to diversify away from Huawei. The India-China story, of course, feeds into this. And I think this is a significant development when you think about it for the continent.
Thank you. And talking about the biggest story for West Africa, I'm sure Nigeria, we all been following the central bank since Monday. Yesterday was the latest in the central bank circular talking about releasing excess CRR to the banking sector, excess above 25%, which is the CRR ratio. The level is about 45% for some banks, as it were. So the central bank says it's going to release this money, but between the carrot and the stick is that money is not going to go to the banks in cash, but it'll be via a new CBN special bills, which the central bank overnight updated that press statement saying, yes, it's going to be 90-day treasury bill. It's going to be at a zero discount. There's going to be a whole lot of rules around it. The banks will not be able to just discount it and run off the market, as it were. So that's the big story. It will be tradable. It will be for retail, institutional investors, as well as the banks. It also forms part of the liquidity assets. I'm asking Suleiman what he thinks about that. Nigeria's real GDP growth rate, if you put Q1 and Q2 together, first half of the year, a negative 2.18% according to statistics data. OPEC has suspended all its meetings until Thursday because there's a rift between Saudi Arabia and Abu Dhabi. Nigeria's request to have its condensate exempted from oil production quota cut has been rejected by the body. How that be a change of mind for Thursday or by Thursday? EcoBank says its delayed 9-month result will be out between now and December the 4th. Today's second, by the way, not between now Friday. And in Ghana, the SEC has started a partial bailout for the remaining financial markets companies or FMCs whose operations were affected by the massive decline that we saw in the operations and the closure that happened within the past 1 year. Let's clear the ground running on the Suleiman. Take us through your understanding of this latest central bank move on monetary policy, liquidity, system management.
Thank you, Boston. I think this is more of a positive outcome for the banks. Rather than keeping those money with CBN at zero interest rate, they have an opportunity to gain some return on those funds.
So I guess we lost Suleiman momentarily. We just got to get his connectivity back. Chima, let me ask you very quickly, when you look at the markets, that was a very, the market looks like we just saw a bit of a slowdown towards the end of last week, but since Monday, it looks like the market is back on a very strong trajectory. I mean, the equities market.
Yes, thank you, Boston. So I think for Monday, Monday was the close of November. Monday was the last day in November, and so I think that's why we saw that perceive to portfolio managers try to rebalance and close out their portfolio for the month. Going into yesterday, we saw that the market still gained 30 bits today, continuing with the positive sentiment that we've been seeing for the past month. So we've been seeing that we will see some positive days and some negative days, ebb and flow, just as investors continue to seek where to fix their funds, given what's happening in the fixed income market. So I don't think anything really special has happened or is continuing to happen in the equity market. I think we'll continue to see cherry picking and bargain hunting and profit taking go on through the year. But overall, the overarching theme would be continued sentiment in the market, given the excess liquidity in the system and given the low yields in the fixed income. The game changer could, however, be the new special bills that the CBN is bringing into the market, depending on when we get more clarity as to how the yields will be structured. I'm hearing that there'll be a zero discount, but the yield structure will be figured out and it will be communicated with the banks and participants. So depending on how attractive or how feasible that comes on, then we'll see how that affects the equity market in terms of funds outflow back into the fixed income market. However, since we don't have a lot of clarity on that yet, I think investors would rather stay put. Although we might see some sell side, a bit of sell side action today, I think it will not be anything very significant because many people will just rather stay on a cautious, maintain a cautious stance.
I think so. Perhaps even the cautious stance will continue to the end of the week for more clarity from the central bank on this, at least perhaps after the first option or so. Juman.
Yeah, I agree. I think until investors are certain what is going to happen in that market, until investors are certain how the yield game will play out, whether it is profitable or attractive or even worthwhile. Because right now the returns from the equity market seem more decent and more attractive than the fixed income market. So unless it's something quality enough or attractive enough to pull funds away from the equity market, I think investors will really just maintain their cautious stance for however long they can.
I think so too. Let me quickly touch on OPEC with you, Ali. In terms of this meeting being suspended till Thursday, is it very difficult for this body to continue to just do a 2-3 day meeting and just move on? It's been at it since weekend.
I think it speaks to the complexity around the challenges that countries like Nigeria are facing, who essentially want to get a bigger allocation in the OPEC number. And I think what it tells me is that OPEC members are still discussing with each other how to handle the situation. Look, it's a very delicate balance that they've got to strike. They've got to maintain a supply deficit of some nature until this recovery really starts to gain traction. And I think that's what they're seeking to do. But I think until then, we're going to see a lot of volatility in the oil price. Although it's risen over the last few sessions. I noticed WTI and Brent is at 47.50. So it's going in the right direction for everybody. But I think they've got to juggle a lot of interested parties right now.
Yes, a whole lot of politics there. How to balance it. Again, this is the final meeting for the year. Perhaps they will have a lot to sort out this time around before the new year gets started. Everyone's perhaps they want to get a whole lot more clarity before the new year gets underway. Suleiman, thank you for coming through back on the conversation around ideas, the new central bank special treasury bills. I want you to continue what your take is. This will have on the yield market for the rest of this week. What's the outlook from Greenwich?
Okay, so it only means that we'll see some more liquidity in the market. It will further pressure yields down in the fixed income market, and obviously it will spur participation in the equity market because we'll seem to see more credit to the private sector, and this further we supply our bills in the fixed income market because regardless of the fact that we are yet to know the nature of the bill that will be supplied, whether it's going to be home or Nigerian treasury bills. However, the directive from the CBN saying that it's going to be available to retail, institutional, and between banks. So it means that it's going to give more supply to those sparse bills in the market, and we'll see further participation in that hand because if we look at the past primary market auctions that have been taking place in the bill market, you see that substantially we've seen a lot of oversubscription of 2 times, 3 times, and because the Apex Bank has not been rolling over as much as they used to. And this supply would obviously spur participation in the market and liquidities especially in the market. This further buttresses the point of the central bank trying to increase our supply of liquidity to the real sector and credit to the real sector, and it's a positive development for the banks and for everybody in the capital market, to be specific, because it means that we'll have more money to play with and we'll have more assets as well to invest in.
Okay, I'm going to ask you one question. Hold your thoughts on that. If the banks right now are under liquidity pressure in naira terms, that is, and if this would in any way increase volume, or just to increase volume of cash, but is there a likelihood that inflation could be inflationary in some way? So I'll give a second to that, a second thought to that. Let's talk about Southern Africa, where the ABSA PMI for the month of November came in sharply lower, still positive at 52.6, but when you consider October's figure around 60, then something must have gone amiss in the month we finished on Monday. Standard Bank says its full year 2020 will be 20% lower than full year 2019, and there will be no dividend declaration. I'm sure that's keeping investors on notice. World full year 2020 revenue 49.7 billion rand, down 47%, operating profit down 54%. Alpha Namibia completes acquisition of offshore unit, 144 million Namibian dollars, and selling cannabis for foreign exchange. Zimbabwe has come up with another idea of how to make money, $1.25 billion in marijuana exports, and that looks like, well, getting creative down there in Harare. Ali.
Awesome. So let me start with the ABSA manufacturing PMI. I mean, it is a significant drop from 60.9 in October. But as I've said, the PMI tends to exaggerate ups and downs. So 60.9 was a very high print. So it was in part because it was coming off that lockdown. 52.6, it's still expansionary. And I think if you look globally, you can see that demand is beginning to pick up. And therefore, I'm not overly concerned about that number. Standard Bank full year 2020, 20% lower. That's about 500 basis points better than some of the other peer group in South Africa is predicting. They've got a strong African franchise. I think they've done quite well in things like foreign exchange across the continent. It's a strong franchise as far as I'm concerned, and I think it looks good value to me on any price reverses. Zimbabwe, this might be why Matuli Cube is so bullish about the economy, predicting $1.25 billion in cannabis exports. Bear in mind, full year tobacco was $440 million. So this is a very bullish call. I think actually it's too bullish, but what I do think is more African countries, I know Malawi's looking at it, Kenya should be looking at it. I think this is a big opportunity to fill the hole of FX receipts that a lot of our countries are facing. And I would urge them to follow the path of Zimbabwe. I think this is a progressive step, and there is a lot of latent demand, particularly in the medicinal field.
I agree with you. If there's a market for cannabis in North America, which is Canada, by the way, and all of that, medically speaking, perhaps we just need to think about that as well in Nigeria. Sulema, what do you think? Because if you look at the whole Southwest, cannabis in Ondo, Ekiti, Oyo, Osun axis, perhaps this is creative thinking.
Yeah, I mean, there is tremendous demand in North America, clearly. I mean, the problem might be that we'll have an oversupply situation. But I think, we have a lot of quality product that, we should be trying to promote. And there's more opportunity in this market space, as far as I can see, than in tobacco and in other products that we're producing at the moment.
Thank you, Alex. Sulaiman, what's your take?
Yes, I agree. I mean, I can remember some sessions back where we were speaking on to the FX and the opportunity in way trying to stimulate FX internally. I think this is one of those opportunities. We need to imbibe those. We need to develop our agricultural sector. We need to develop our manufacturing sector such that our export can increase, our export can spike, and we can, I mean, generate some form of pipeline for FX flows rather than we depending on capital importation solely or receipts from just crude. So this is a viable opportunity, and it's something that we've seen the central bank try by injecting credit and some form of forbearance into that sector. But I think, like I've always said, the challenges of agriculture and manufacturing in Nigeria goes beyond credit. It's more fundamental. It is more infrastructure, and we need to first address those issues before we can start seeing the full benefits from that segment. Going into the question you asked earlier on about how the liquidity will impact inflation. If you look deep down into our inflation data, you realize that the key drivers of inflation has not always, it's not demand at this moment. It's not the supply, it's not the supply of credits to the sectors or to the economy generally, but it's more of a cost push inflation. You look at key drivers of inflation in Nigeria is FX and PMS. And we've seen lately that those two has been quite volatile. We've seen PMS increase month on month, and we've seen FX illiquidity impact how manufacturers can access inputs, because majority of their inputs is imported, and also the border closure is part of it. And if you look at the recent happenings in the key food basket of Nigeria, you see that food inflation has not been so nice on us this year, and that is why you see the drastic spike in prices of food product and staples generally. So it's more. It's going to be a nil off if you ask me. Liquidity is not really going to impact that inflation that we're looking at, but it is more going to be cost push, because all those cost drivers for inflation, it's currently volatile, and it's not something the CBN has really had a grasp on this year. You see that they're more concerned about growth rather than inflation.
Interesting. If Chima will give us about a minute or so around this food inflation with the consumer goods, with all the problems we're seeing associated with the country's food basket, those corridors where you have farmers. And then we'll talk about the anchor borrowers program for rice for the central bank. But now here are farmers being slaughtered on their farmlands by their dozens.
Thank you, Boasim. So I quite agree with Suleiman on his take on inflation, on his outlook for inflation. But I think also that while the problem for inflation has usually been cost driven, we are also seeing the impact of excess demand or shortfall in supply affects inflation as well. So given that the food supply for the country is very limited, we are seeing challenges to agriculture, challenges to farmers, and the impact on the food sector. Given that we have still a healthy level of demand and expected increase in liquidity to still chase the low supply in the market, I think that would also affect inflation and still inch it up higher. So even while I take what he said, while I agree with him, I still think it will have a bit of an effect. Also for the consumer goods sector, given what we're seeing in the with regards to the agri sector, we expect that it would affect input costs a lot. On one hand, we have that manufacturers have to still import some part of their inputs from other international suppliers, and they have to deal with FX and the likes, and they have to deal with the ban on food importation, ban of FX for food importation. Now coming home, some of them have been able to successfully integrate the backward integration program into their supply chain. They've been able to collaborate with local farmers, and to I think Nestle for one has gotten up to about 80% local sourcing. Guinness as well has gotten to about 80%. Some other companies have gotten to at least well above 50% 50% in their backward integration sourcing. So this will definitely take a toll. The challenge to farmers, we first saw the impact of COVID-19 on supply chains and transportation and logistics constraints. Now we're seeing that the farmers themselves are being threatened, and they'll definitely be unable to, that'll definitely affect their productivity, and we'll see that affect output as well as prices. So in terms of the consumer goods companies, we expect to see further pressure on margins as input costs continue to rise. Also going down with further expected increases in PMS and FX challenges, we expect to see operating margins continue to shrink as well. So overall, while we are seeing positives in terms of volume, so a lot of these companies have been able to improve their subsidization drive to cater to price-sensitive consumers. That's helped volumes a lot. So while we're seeing increase in revenue, the other leakages in terms of cost, input costs, and in terms of operating expenses will definitely take a toll on their profits.
Okay, quite a whole lot of work to do out there in that corridor, by the way. It's still a whole lot of work in progress, let me put it that way. They all kind of connected with FX, with backward integration, raw materials, machinery, and all of that. You want to increase exports locally, but you can't do that really without some form of FX. So it's a whole lot of head scratching for both the fiscal and monetary authorities, by the way. Thank you to both of you, Chima and Akitide Sulaiman. Let's check in with the North Africa, where Tunisia's economy will contract by 7.3% by the end of the year. That's according to sources within the country. That's the central bank of science. Total Maroc says the sales down 20%, but debts rising 4.2 million dirhams in the first 9 months of the year, January to September. Egypt's offshore group, Maridiv, says the net loss was about 23%. And the BMCI group, which is the banking financial services group, says its net income was 1.1%, just slightly that, about 2.3 billion dirhams in 9 months. Ali, you want to speak to the Tunisian economy contraction outlook?
Yes, I think, that number is quite large, the contraction, and I think that's all about Tunisia being a highly dependent tourism economy. And really 2020 has hurt tourism-dependent economies the most. And I think Tunisia has been at the cutting edge of that, and that's why you're seeing such a sharp decline. I think going forward, the vaccine, the European source market for Tunisia should support that economy into 2021. So probably that's going to be the worst, and we should see quite a neat snap back. North Africa obviously will benefit from a rebound in emerging markets. We're seeing good demand in Egypt. We're seeing an improvement across that northern belt. And I think that will underpin the recovery in 2021, along with this renewed push by Europe to be, and other middle powers like the UAE and Turkey, to play a role in that space.
Interesting. Thank you so much for wrapping up the show for us this morning. Alec Ansacho, CEO and founder at Good Conscious Management. Thank you so much for your insight, and we appreciate your time as well. This is from Greenwich Merchant Bank, and of course, Chima Ukadike, who is in charge of consumer business analysis at Total Capital Management. Thank you so much, everyone. Have a great day, and see you tomorrow, Thursday. Bye for now.